Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin and the fact that we have now fallen below the 2017 all-time high. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Now, this is something we've talked about many times before. We said that we will likely go sub 20K at some point. I am a little disappointed in how quickly it has occurred. But regardless, we do find ourselves in a position that has been seeming like a very likely scenario for the last several months. Now, one of the reasons that I think it makes sense, even from a market cycle perspective, is to not necessarily look at blanket statements like we've never gone below the prior all-time high, but to actually look at trends where you look at the prior all-time high and the bottom of the next bear market and say, well, the distance has been decreasing, right? So you would then assume that eventually we will test it. Of course, this is in line with diminishing returns. If you look at cycle peak 1 to the bear market following it, you can see it was about over a 400% difference. But from the next peak to the next bear market, it was only a 144% difference. So now we are, of course, in the process of figuring out just how far below the prior all-time high that Bitcoin is going to go. And again, this is really well captured by looking at logarithmic regression bands, which again do account for diminishing returns, or at least shows those diminishing returns more or less playing out. Okay, so eventually you would expect this type of behavior to occur. Now, one of the things that I've mentioned many times is the idea of comparing this to just the dot-com bubble. Okay, there was a lot of lessons learned in the dot-com crash, and arguably we are experiencing more or less the same thing. We talked about this, a few months ago, and I want to re-talk about it because we've come a long way down since then. So a few months ago, we talked about the crypto bull, understanding the risks with cryptocurrency, and the reason we talked about that was because, again, we were comparing, say, the Super Bowl when you had the dot-com bubble, and they called it the dot-com bull, to the crypto bull in 2022, where crypto took over the Super Bowl. But I found this article, back in 2009 or 2000, November 9th, 2000, where it talked about how the values of 280 stocks that more or less represented the dot-com stocks, they peaked at approximately 2.948 trillion. And again, if you go look at crypto, it also peaked at around 3 trillion. Now, if you go back and actually look at the NASDAQ during the dot-com crash, you can see that it in fact dropped approximately 83%, 83 to 84%. Now, if you go look at the total cryptocurrency market capitalization, you can see that in fact we've dropped about 73%. Now, listen, there's a lot of indicators out there. There's a lot of people calling for bottoms every step of the way, right? Like every step of the way, there's someone calling the bottom. But the truth is that you need to look at every single macro situation and try to figure out what does history tell us, and then you try to piece it all together. So one of the things that we know that's going on right now, which is making the macro look incredibly bleak at the moment, are things like inflation. And again, this is the S&P 500 overlaid with inflation. And one of the things we will clearly note, and I've made many videos on this, is that when inflation peaks, that tends to correspond to the bottom of the S&P. So this is inflation here, this orange line, where it peaked at over 12% year over year in 1974, and the S&P did not bottom until that time, which ultimately represented the S&P going down approximately 50% or so. If you go back into the 1970s, you'll see a very similar type of move where the S&P bottomed right around the time that inflation hit that first peak. And again, even from this local top, it represented about a 50% drop in the S&P 500. And so when we go look at the market today, we can continue to see the S&P is dropping. We also know that inflation hasn't necessarily peaked yet, and it would be somewhat irresponsible to assume that it has until really proven on the charts, okay? I think inflation has it's continuing to go up, and it will likely continue to go up for some time before we actually see a more convincing peak, a local peak at least, with inflation. And until that time occurs, we should not yet assume that the S&P 500 bottom is in. And since Bitcoin acts like a very like a risk asset, just like the S&P 500, we should also assume the macro bottom is not necessarily in. It's always difficult, figuring out separating a local bottom versus a macro bottom. But again, if as we said, if history is an indication, given the fact that the S&P doesn't tend to bottom until inflation peaks, we should also assume that Bitcoin will behave in a somewhat similar manner. Okay, I do think that makes the most amount of sense. Now, if you were to measure the total crypto market cap down 83%, which is what the S&P or which is what the Nasdaq ended up doing back 20 years ago or so, it would ultimately put the entire crypto market cap down a few hundred more billion. I mean, we're sitting at over 800 billion right now, which coincidentally is right around the prior all-time high from 2018. But this shows that we could still, in fact, have further to fall. One of the things that I think shows that is that we've talked about this many times, and the Bitcoin dominance is something that I fully expect to go much higher. And really in 2022, it has gone much higher, and I've been kind of celebrating that because I've told you guys for basically half a year now that altcoins remain incredibly risky and that stacking cash during this phase makes a ton of sense. The lower Bitcoin goes, I will say the lower the Bitcoin goes, the stacking cash strategy does not it's not as clear, right? It won't become as clear. It's not as clear now at 19K as it was at say 40K. But we do know that these bear markets can last a while, and considering that the Fed is very much likely sending us into a recession, or we're probably already in one, it would be prudent to assume that lower prices could eventually come. Now, the Bitcoin dominance right now has dropped all the way from 48% or so back down to around 44%. And I think one of the reasons for this, again, as I've said before, is Bitcoin does have a lot of liquidity. So if you have a lot of institutions dumping and whatnot, Bitcoin will be the first to go down. But you will remember that during phases where Bitcoin starts to go sideways, especially like what we saw over here, we saw the Bitcoin dominance going up quite a bit. So I do think, and perhaps I am somewhat stubborn, and perhaps I'm somewhat biased as someone who doesn't really own many altcoins at the current time, but I do think the Bitcoin dominance will go higher. If it goes below 40%, then clearly we're doing something completely different, and that thesis will be wrong. But I will stand by. I do think the dominance will continue to move up. I think that this temporary setback by the Bitcoin dominance is only reflecting the higher liquidity in those trading pairs than the altcoins, but the altcoins will eventually go down. And one way to visualize that is just simply go look at some like alt Bitcoin pairs or Ether Bitcoin, and you can see that it's in a downtrend. And one of the reasons why Bitcoin dominance is going down isn't necessarily because it's flooding to altcoins, it's because the stablecoin dominance can go up. But again, if you look at things like the Ether Bitcoin valuation, you'll see it's in a fairly clear downtrend. And we talked about this Wyckoff distribution up here of the Ether Bitcoin valuation. I would continue to expect this to go down. Even if you look at other projects like ADA Bitcoin, I do understand that it's doing relatively well right now. It tends to pump into these forks that it's about to have here in the not so distant future. And so while I do think ADA will eventually bottom against Bitcoin, I still would argue that right now it is in a macro downtrend against Bitcoin. The same thing goes with Polkadot. The same thing goes with Link, and so on and so forth, right? Uni, Maker, Litecoin, right? You just go down the list, you can see a lot of these altcoins are in fact bleeding against Bitcoin. So hopefully people have been, realizing this bear market is in full effect. Remember, the bear market will be over when the last bull admits it's a bear market. I do suppose that more people are finally starting to admit it, but I'm not yet convinced that the bottom is in, especially not until we've seen clear signs that inflation has in fact peaked. Okay, so that's what we need to see. All right. Now, in terms of where could Bitcoin ultimately go, we've talked about that a lot before, and I said we could certainly go sub 20K in a bear market. I mean, if you look at prior trends with Bitcoin over the last decade, we've seen that bear markets have been brutal. And while I understand that we're in a recession, so far we're not even as far down as prior bear markets. We've seen bear markets for Bitcoin be upwards of 94%, or I believe this one was, if I actually get it all the way down to the bottom, this was around 87%, and then this one's around 84%. So you can certainly see that, yes, we understand that inflation is high, and therefore the Fed can't really pivot as quickly this time as they normally do. I've seen a lot of people say that the Fed will pivot really, really soon. I continue to disagree with that because I think there's some recency bias in thinking the Fed will pivot. I think the reason that people think the Fed will pivot is because that's historically what the Fed does. But the Fed doesn't pivot when inflation is going out like this. Like that, we don't really see the Fed pivot during periods of high inflation because that is one of their mandate. They need to get inflation under control, and that's more important to them than the valuation of your or my portfolio. So I do think that you can kind of see where this where this entire thing is going. Bitcoin is, of course, it's still in the bear market right now, but eventually, after inflation peaks, which will probably either be sometime late this year or next year, right? Either late this year or next year, we'll likely see a more convincing bottom on traditional markets. And after that occurs, the Fed will likely pivot because the markets will likely price in the Fed pivoting before they pivot. Markets are efficient like that. It's the same way the S&P started going down before we saw, a contraction on the US GDP in the first quarter of this year. So in the same way, the markets will likely bottom before the economy looks bright. It's just something that we've seen happen many, many times. Remember, markets are very efficient. And you can also imagine that going into 2024, the 2024 Bitcoin halving, that between now and then, so we have just under 2 years before. I mean, it's not going to be in the summer of 2024. It should be slightly before that. But during that period, I imagine that Bitcoin will find a market cycle bottom. Normally, by the time Bitcoin gets to the halving, it can be as much as 2 or 3x above the bottom. Okay, so when we talk about that, I think you kind of see where everything's going, right? Like Bitcoin's in a bear market right now. The Fed is raising interest rates because inflation's continuing to go up. And as long as inflation goes up, we will not assume the S&P is bottomed, or at least I won't. And if the S&P hasn't more convincingly bottomed, then there's no reason to necessarily assume that Bitcoin has. But after inflation comes under control, which should happen well before the next Bitcoin halving, the Fed will be able to pivot, and then they'll likely start to lower interest rates again, and it will lead into another bull market. But until that time, I do hope you guys are trying to be extremely cautious in these markets and to recognize that these bear markets can go on for longer than we all really want them to. As far as altcoins, my general thinking remains the same. You're likely going to see the Bitcoin dominance go up a lot and alt Bitcoin pairs bleed over the macro scale. I think a lot of times there's just recency bias pointing towards like local pumps as the reason why that's not a valid strategy. But again, even in 2018, you sometimes saw these types of pumps. And the Ethereum Bitcoin valuation, I still would argue, remains incredibly bearish, and it's likely going down much further than 0.052. Okay, and we talked about this Wyckoff distribution pattern many, many times over the last several months for the Ether Bitcoin pair. So, let us just try to be patient. Okay, I don't know exactly where the bottom is going to be. I think there's going to be a lot of people that attempt to call for the bottom over the next several months, and there's going to be a lot of people saying like, I just insert a large sum of money at this price, especially on altcoins, and then you'll likely to see those altcoins continue to go down. The best thing you can do is just recognize where we are in the market cycle. We are, of course, in a bear market right now. And once this bear market is over, we will enter into the next more convincing accumulation phase. For those people that are looking at a $19,000 Bitcoin and thinking that's a good price, you're probably right. If you have like a 3-year time horizon, 2 to 3 year time horizon, a 19K Bitcoin is probably a pretty good price. Okay, but it doesn't mean it can't go lower. In 2018, I was accumulating Bitcoin at 6K, and then it dropped to 3K, right, as a 50% drop. So it doesn't mean that accumulating at 6K wasn't necessarily a good idea from a macro perspective, but certainly at the time, I wasn't really feeling that smart, accumulating here only to see it drop down here. So in terms of value, certainly below 20K is much better value than 40K or 50K. But these things will have a way of going lower than a lot of people think. So Please be careful out there. Do remember that I understand that altcoins they have done somewhat okay against Bitcoin recently, but you would expect relief rallies on the altcoin Bitcoin pairs occasionally, even in a even in a bear market. We've seen that even in 2018. So, with all this in mind, I do hope that you are, you're following whatever strategy that you've set for over the last few months. I know we've talked about alts remain incredibly risky, cash is king, right? I mean, I know people don't like to hear cash is king because of inflation, but I mean, at the end of the day, if you're losing 10% year over year to inflation, I know it sucks, but it's not, I mean, what's worse, that or losing, 80% on an altcoin? So I don't really, I mean, I'll let you be the judge of that. I don't fully know exactly how far all altcoins will go down, but I do think they will go much further down on their Bitcoin valuations. And also do remember that most altcoins, at least in the last cycle, did not bottom against Bitcoin until about half a year after Bitcoin bottomed against the US dollar. So that is something I think that's important to remember. The other thing that that's difficult in bear markets are the bear market rallies. The Nasdaq, excuse me, is in fact approaching the 200-week moving average. We have seen the Nasdaq bounce off of that level before, even in the .com bubble crash, right? You saw the Nasdaq pop up 20-30% or so. You saw it happen in the financial crisis as well. Is it going to happen this time? I don't really know. I'm really not the best at calling exactly when a relief rally is going to occur, if history is any indication. So I will not, I really have no idea exactly when it'll occur. But I will say that from a macro perspective, right, again, there is no reason to assume the bottom on these, not only crypto, but traditional markets as well. There's no reason to assume they're in until inflation peaks, because in the 70s and in the 40s, it wasn't until inflation peaked that marked the macro bottom. No matter what indicators you had, inflation peaking is what led into the S&P finally bottoming. And you'll likely see something similar happen, play out this time around as well. Okay, so try and be patient, recognize that, and the key thing to recognize is that phases like this, if you're young, especially if you're in your 20s or your 30s, this is leading you into a generational buying opportunity, not only in crypto, but also in equities, right? So the point is can you stick around through it, and just kind of see it through to the other side, right? I don't know exactly how low Bitcoin will go, but if you think forward a year from now, in 1 year, we'll likely have inflation more or less under control. At least hopefully it'll start coming back down by then. The Fed will likely not be nearly as hawkish, and we're going to have the Bitcoin halving in sight. Okay, I don't know exactly how low Bitcoin is going to go, but in a year, I think the macro is going to start looking a lot better, and we'll be gearing up for another bull run. Until then, just try to be as responsible as you can with investing, and I will see you guys next time. Remember, check out or at least subscribe if you guys want to follow it. I mean, I know these market conditions are difficult, but we will be here every step of the way. And check out Into the Cryptoverse Premium at intothecryptoverse.com. We do have the sale going on. All right, guys, I'll see you guys next time. Bye.